Thank you for joining me. I'm Alex, and I would like to talk about Coca Cola. So, pretty much everyone knows what they do. They make drinks, lots of drinks, and they've been expanding pretty continuously for the past, 100 years. So, obviously, they know what they're doing. They know how to survive any recession. They know how to market to any market. They're worldwide, and there are not a lot of risk factors for Coca-Cola because there's just no one that can take their place, really. People are fairly stuck on what they like and what they don't like, and they're fairly good at passing that on to their children in what they buy. So, price right now is $53.66, market cap of $229 billion, and a PE of 33. Now, that PE is not too bad with a dividend yield of 2.97% and a payout ratio of 92%. The payout ratio of 92% is amazingly high, and it's been there. And for a lot of these really big, really old companies, the payout ratio is kind of there because in the olden days, they would pretty much pay all of the money to their shareholders. So they don't really leave themselves a lot of room to spend money to grow. But as a Coca-Cola, you don't really need to spend money to grow. There's pretty much nothing you can do. They could invest a lot in marketing and ads and everything, and I don't think it would change their top line a whole lot. So revenue $34 billion, which is down very slightly. Earnings $6.4 billion, which is up 400% from the previous year. The year before that, it was pretty much the same $6.4 billion. So it's not that this year is amazingly good, it's just that last year was amazingly bad. So it's pretty much unchanged for the past few years, except for last year, or the previous year from the last earnings. So pretty much even, not a lot of growth there, obviously. Total assets $83 billion, which is down. Total liabilities $64 billion, which is down more. And total stockholders' equity of $17 billion, which is down under 1%. So to recap all of that, for a growth investor, obviously this is not the stock for you. For a dividend investor, I think the dividend yield is quite good. The PE is slightly high, but there's basically no risk factors at all anywhere ever. So it's one of the safest stocks because people are just going to continue drinking what they have been drinking, and there's no company that can take their crown, and there's no competitors entering the market and gaining a significant market share or anything. So basically no risk factors, very safe stock, decent dividend yield, obviously. So for a dividend investor, I think this is actually one of the best stocks you can buy right now, just because it's so safe and the dividend yield is quite good for how safe it is. For a value investor, I think the PE is quite high, but obviously, again, a very safe stock. The dividend yield is not bad, and I don't think that you're going to have very many companies right now that have the same correlation between dividend yield and PE. Take, for example, a Walmart, which has around the same PE, but 2%-ish dividend yield. So I don't really know if there's any other stocks that are comparable in their safety that pay such a high dividend. So I think that it's a good stock to either diversify into or have kind of as a base of a portfolio to build onto, because it's one of those companies that you can make into a very big position compared to your total holdings, and it won't really affect you in any negative way ever. So I think that it's a good stock for pretty much anyone to have in their portfolio and basically hold forever. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.